Hey guys, what's going on? It's Alec. Welcome back to my channel. I hope you guys had an amazing trading week. I'm up a little bit over $5,000 based off the trades I shared in last week's video, but for today I wanted to share with you guys the top 5 mistakes that I see day traders make every single day. I dealt with these issues too when I was trying to become a full-time day trader. I still deal with them sometimes on a daily, maybe even weekly basis, but without further ado, let's hop right into today's video. So the first issue that I see everybody make is that they try and follow people blindly, meaning that they try and go in different chat rooms or discords and they basically are just looking for sell or buy signals. So it's something I've seen. It's something I even did when I first started. I thought it was the easiest way to make money, and really all it ends up being is some fake guru trying to sell you their position where they got in 30-45 minutes before. They're going to pump it up and then they're going to dump it onto their followers and they're like, oh, sorry, you guys got to do your own due diligence, your own research and analysis before coming into my position. I also see people sell puts, they sell calls, they do different spreads, they do, random wheel methods, whatever it may be. I know there's tons of different variations and varieties of strategies out there, but basically people spend 1 or 2 days on every single strategy, but they don't take 6 months or a year to come in and actually learn a solid strategy. Now, just a side note on that, I was also in that boat. I really didn't have a solid strategy until the past 2 years. Now, I also struggled with not finding a solid strategy up until about 2 years ago. It's basically the same strategy I use every single day now. It's something that's made me extremely successful and it's something I can share in future videos. But at the end of the day, every single day trader is different. Everybody has their own risk tolerance, their own trading style, and something that may work for me may not work for you guys. But in general, I think my biggest piece of advice is to find a strategy that you think makes sense, that you can understand, and then really work hard at it. Don't work at it for 2 or 3 months, work at it for 6 months, a year, even a year and a half, and really take the time to hone in that craft. I think a lot of people take time and they think that trading is something that's super easy and that's something that can make you a millionaire in 3 months. And it can make you a millionaire, it can bring in a ton of cash, but at the same time, you go to college for 4, if not 5 or 6 years, depending if you get a master's degree or not, and you still go out and you still need to get a job and need at least 2 to 3 years of real world experience before you even become successful in your current industry. The same thing happens with trading. You can't learn for a year and a half and not apply it. You still need to have time in the market. That time in the market shows you, what part of the strategy works for your specific tolerance and your specific mindset, and then you tweak it and you make it your own strategy. I think another thing that people also really miss out on is the fact that they probably got in last March when the market was at the lowest it's ever been in a very long time, and literally if you had thrown 10 grand at any single stock, it would have been up over 100%. I think a lot of people got extremely lucky, and kudos to them. I know I threw a ton of money at it and I made a lot of money as well, but I think a lot of people thought that their buy and hold strategy was going to work for the rest of eternity, and when things start getting super choppy like we've seen over the past 3 months, that strategy goes right out the door and you need something that you can use day to day. With that being said, I've still kept the same success rate from last March as I do today. If not, I'm better off today because I can play the market intraday, and the first 20 minutes of the day might be completely red, and then all of a sudden it shifts and it's a complete bull cycle again, and I can catch both ways. Now, I think obviously this isn't going to be for everybody, but I really do think that you can find a strategy that works. And again, there's a ton of educational content out there where you can find whatever strategy you want, whatever works. But point is, you got to find a strategy, you got to stick to it, and you got to put your time in the market. You can't just expect to be successful overnight. It's going to take you, if not 6 months, a year and a half before you really find something that works for you and something that you're comfortable using every single day to make your money. Issue number 2 that I see all the time, and it's usually with a lot of new day traders because they're on margin, is they overextend their risk. So they have a ton of high risk leverage, but they don't know how to actually manage it. So what that means is if you have, let's say, a $30,000 account, you can generally get 2 times margin to where you're at $60,000 in buying power, let's say, for stocks. And what that means is you can buy $60,000 worth of stock, so you can use other people's money, which is always a great thing to do. But with that being said, people go in and they throw $60,000 at, let's say, GameStop, and they ride it all the way up to $430 or whatever the peak was, and then they have no sort of exit strategy. On the other hand, they could get into something like Peloton where they just had a bunch of recalls and they thought, it was down 13% over the past couple days. It'll be fine, it can't really go any lower, and then it drops another 30% and they don't have any stop losses set. So you're on high margin, you have no stop losses, you don't even have an entry or an exit target, and you expect to make money in a market like this where it's a whiplash. You're going to break your neck going all the way down and then going right back up 20 minutes later. Now, it can get a lot riskier, and I currently only play options. I don't even mess with stocks because I've taken the time to learn how to trade options. With that being said, options trading is extremely risky. I don't recommend it for anybody that's new, but There's been times where I'm down 20% for the first 5 minutes that I'm holding an option, but it still hasn't broke my entry price. And then there's times where I'll be up 300% after 30 minutes of holding it, and all of a sudden I'm down 150% off that 300% gain because there was 1 or 2 red candles and the market just completely destroyed me for a second. You have to find the risk tolerance that suits your best trading strategy, and you have to stay with that to a T. You have to make your set of rules and you can't deviate from them. So for me personally, I cut all my losses after 5%, regardless of if it's gonna come up or down, it doesn't matter. I cut them and I'll look for a better re-entry. Just to recap, issue number 2, I think it was a little bit long-winded, but I wanted to share a lot. Basically, you need to have your entry and your exit strategy. You need to have that well before you even get into the trade. On top of that, you need to be able to manage your risk, have stop losses, and be able to take a hit and get back up. Just because you guys have margin does not mean that you guys are invincible. And I see a ton of new traders. I mean, I'm training a ton of new people every single day. And I think a lot of people really need to take a look what they're comfortable risking in a trade, whether it's $500 or $50,000. You need to find the number that's comfortable for you to where you could comfortably lose it all if the market just completely dies on you, or if you're short and it goes 10 green candles and it just destroys your position. Issue number 3 that I see is everybody wants to find the easy way in trading, and that usually means following gurus on Twitter. Now, I don't think that all gurus are fake. I think that there's a lot of people that do really good financial analysis. They do a ton of technical analysis. They do fundamental analysis. And generally, they share some pretty good trade. I've had a little bit of success with that on Twitter. I usually follow it just for the memes. But I do think that there are a ton of people that follow, let's say Atlas Trading. I think they're great individuals, but I think they follow them. And all the top performers in that entire Discord, they all do all their analysis. They know their entry. They know their exit. But all their followers don't necessarily have that information. So when they're going to get into a trade, they could get into Fubo or Peloton or whatever they want, and they're scared because they have no clue when they're supposed to exit because they haven't done their own analysis. I call this just following the herd, being a sheep, and I think that people really need to get out of that habit, and they really need to find a trade that works for them. If you're following a position, chances are you have no clue why you're in the position. You just think it's a good idea because there's 20 other people that said it's a great idea. So yes, you might make a little bit of money doing this, but at the end of the day, you need to do your own research, you need to do your own analysis, and you need to ultimately find out if that trade's good for you, if you should sit out and wait for a better trade. Just because somebody's verified on Twitter, or just because somebody has 300,000 followers on Twitter and can post gains from a paper trading account, does not mean that they are doing this full time or even that they're successful with it. They could have $10 million losses and show a $2 million gain on a paper trading account. You guys have to remember that. Issue number 4 that I see with pretty much every single options trader, and this is going to be definitely more specific to options trader versus stock traders, but it still will apply, so stay tuned. So issue number 4 that I see, and this is mainly specific to options trader, but it also applies to people who just trade regular stocks, is that they don't look at a couple key fundamentals when you're trading options. Those being open interest, volume, your expiration date, and the volatility factor. So for open interest, generally speaking, you need to have a buyer and a seller for every single contract, otherwise they're going to be worthless. So oftentimes when people ask me questions, whether it be on Twitter or it's on YouTube or even in my own Discord, a lot of people ask me, hey, what type of open interest are you looking at? Do you look at something with, let's say, 50 open interest, or are you looking at like 2,000 open interest? My personal rule of thumb, and this is one of my main trading rules that I have set for myself, is I do not take a position with anything less than 500 open interest or 1,000 volume, and I'll get to the volume in a second. I've personally found that I like to have liquid options, meaning I can get in and out extremely quickly. I can set a sell order and it'll get me out without having to find a buyer for 30 minutes because I don't like when things go against me quickly. I trade momentum, meaning I trade the turn. I don't necessarily trade for the long haul. So yes, this is extremely risky, but yes, I also have the risk tolerance, I have the account size, and I have the experience to be in this position. That being said, the open interest plays a huge factor into it because I trade Amazon and Tesla, both of which have several thousand in open interest on every single strike date and every single strike price. So that way I can get in and out within a couple seconds, and I'm not sitting there with an $800 or $900 loss. I can sit there with a $200 loss instead. An example of this, earlier this week, I didn't follow my rule. I was trading Oracle, I was actually shorting it, and I had some 78 puts for this week. It completely tanked, and I was up pretty large in my position, and I couldn't sell it because I had 100 contracts, but the only bid that was close to what I wanted to sell it for was only for 2 contracts. So I had 98 other contracts that I did get out of, and I ended up getting out of it for a loss because even though I was in the right spot, there was nobody there to buy it. So the second key of this is going to be volume, and this is something that I look at more than anything else. It's pretty much the same as above. You're going to need a buyer and seller, and when you have 20 volume in an entire day of trading, that's not going to be good enough to move your stock price or to move your option price up and down. At the end of the day, the only reason your contracts move is because somebody's constantly bidding and the price is constantly going up because of that, and vice versa. When you're a seller, you're constantly moving the ask up as the bidders are moving their price up. So if there's nobody trying to buy it and there's nobody trying to sell it, then you're going to have a completely stagnant contract, and you might as well have just bought commons on it so that way it actually moves in the direction that it should be. This was something that took me honestly a pretty long time to figure out. I was like, why the hell is my option not moving? At the end of the day, it's because there was nobody that really wanted it, because it could have been some random stock like ARCT where it just doesn't have a ton of volume, and it's something where you got to hold it with leaps and hope that it goes up, or you might as well just buy common shares on it. The last thing I look at is the expiration date. So on Monday through Wednesday, I play the same week expiration. And then on Thursday and Friday, depending on how the stock's moving, I generally play next week's or another week out. So the reason I do this is because of theta decay, and really what this means is Monday through Wednesday, a stock can move up and down. You can trade it intraday, either go long on it or short it with options. And generally speaking, I will not take huge losses. If something is moving against me, I can hop out for, let's say, anywhere between a 2 to 10% loss, and I'll be okay. Now, come Thursday or Friday, you have a ton of IV potentially if the market's been crazy like it has been for the past several weeks. On top of that, you have a ton of theta decay because of Thursday and Friday. The options are expiring either in 1 or 2 days, and that can absolutely destroy your position if something moves against you $20. This took me about $10,000 in losses and a ton of different chats with other day traders that are full-time to figure out what would work for me. And eventually my risk tolerance said, hey, I'd rather make a little bit less money on Thursdays and Fridays than lose a ton of money that I gained from Monday through Wednesday. Again, this is what works for me. This will not always be what works for somebody else, but this is something that I've generally found success with, and it's something where I can consistently pull in at least $1,000 a day trading, and it's relatively low risk to me. I can sit comfortably at night and know I'm not going to lose a ton of sleep just because I bought weeklies on a Friday morning. I better hope to God that it's going to be up by Friday afternoon with all the theta and all the IV and everything that goes with it. So issue number 5, and an issue that I think is by far the one that I still struggle with, and I think everybody else struggles with every single day, is going to be that they let their emotions play into their trade. So with that being said, I think obviously emotions play the largest part of day trading in general. I think, you're super happy when you see a $5,000 gain, and you're even more sad when you see a $5,000 loss. One of the biggest pieces of advice that I can give after doing this for several years is you will always have losers, and you will also always have winners. You just have to make sure that when you have your losers, you cut them fast, otherwise it will completely destroy your winners. You will not always be right, and I think that's something that a lot of people hate to hear, and it's something that I hated to hear. I think, I was ego trading for a while, and I would take a $5,000 loss and be like, oh, it's fine, I'll make it back. But at the end of the day, you're still losing $5,000 that you worked really hard to make. And just because you could potentially make it back doesn't mean that you should take a $5,000 loss. I think you are extremely naive to think that, you should take that $5,000 loss and it's just trading. It's your trading tuition, I think is what a lot of people say. But it really should be, you should really be focusing on taking that $5,000 loss and minimizing it to $500 to $1,000 depending on your position size. Obviously, if you put $50,000 into something and it moves 10% against you, you're gonna have a $5,000 loss. But if you put $10,000 in a trade and you lose 50%, that's just terrible risk tolerance and risk management. And you should come back to the drawing board. I can understand that people get mad when they lose money. I still get mad when I lose money. But at the end of the day, you have a strategy, and that strategy should tell you your entry and your exit every single time. For me, if it goes 5% past my entry target, then I'm gonna cut it, because that means my strategy says, hey, this isn't working. Get in when it hits this. And if people, completely disregard their strategy, which is the reason why they're trading in the first place, then they're trading off emotion, and that's never going to get you anywhere. When that happens and people completely deter away from their strategy, they usually end up gambling, and they try and find some random YOLO where they'll make back that $5,000 loss with, let's say, $150 or $200 in a YOLO. And they're like, hey, it's the end of the week, it's $200. I'm going to throw $300 at Tesla on some weeklies, and they end up losing that as well. But then they keep doing that over and over and over, and it starts snowballing, or they'll try and swing a $10,000 position, and it ends up losing another 50% because it wasn't the right time, because their strategy didn't tell them to. I was guilty of it too. I've done every single thing that I just mentioned many times. I've lost a shit ton of money doing it. That's why I'm making this video, is because I want you guys to learn from my experiences and learn from somebody who's lost that much money. That way you guys don't have to do it. You guys can live through me, you guys can use my mistakes, and you can keep the money in your bank account, so that way you guys aren't struggling to get more money when you're trading. I think the last piece of this puzzle is the fact that sometimes the best trade is no trade at all. And what that that means is if your strategy shows that there isn't a setup, then you don't need to take a trade. There's a lot of times in the market where I'll sit here for 4 or 5 hours if I haven't found a good trade for the day. And honestly, if I haven't found a good trade in the first 30 minutes to an hour, I'm probably just going to walk away and go to the gym and work out and come back in the afternoon anyways. But if I can't find a good trade, stuff's trading sideways, it's not trading in the direction I want, or there just simply isn't a setup, I'm not going to force it. And that's something I really struggled with when I was a younger trader is, I really wanted to be in the market all the time because I see all these people making $10, $20, $30,000 a trade, if not, just a day. And I'm like, well, how are they doing it? But at the end of the day, they're just finding the setups that work for them, and then they throw a ton of money at it. So for me, I'll wait for 30 minutes or an hour and I'll find something that's like setting up, it's consolidating, it's ready to go, and I'll wait for every single indicator to align for me. And then at that point, I'll throw 10 to 20 grand behind it and I'll let it sit, I'll let it ride to my to my exit target. And if it breaks my entry, then I get out and that's fine. I'll move on. I'm not going to sit here and be mad about it. But I think a lot of people had a ton of hope and they had a ton of greed from the past 8 months to a year, basically from April until January, where the market was running, the hottest it's ever been. And that's due to a lot of different factors that I won't get into, but they got into this situation, they made a ton of money, and then they lost it all in the past couple months because they didn't have a strategy, they didn't have any risk management. They were trading purely off emotion, which I can completely understand if you make $100,000 off Tesla, and they don't have any sort of formal education. So I think overall there are a lot of different issues that traders face, and I think that you can definitely mitigate the losses on a lot of them. You can definitely work to get past them, but I think at the end of the day, you have to sit down and it's going to be you versus yourself every single trade. It's going to be, at this level, it's a mind game for me. It's not, I have the ability to pull $2,000 out of my ass. I have the ability to pull 10,000 out. But at the end of the day, it's what you do with yourself, and it's how you control your emotions and your mindset as a trader that will ultimately make you into a professional full-time trader, or it'll keep you in the same position that you're probably at right now, where you'll be choppy in a, you'll have a sideways account basically. You'll be up 1,000 a day, you'll be down 1,500 the next, you'll make another 500, and it's just the whole thing for the next 6 months. So if you guys want to be a full-time trader, if you guys really want to take it serious, you guys need to take the time to educate yourselves and to manage your emotions and to manage your mindset. That's going to be the best piece of advice I can ever give anybody when they're trading. And I think that's what got me to the point where I'm at today. I know this video was a little bit longer. If you guys want to see more of this content, please leave a like on the video, a comment in the comment section below. And if you really enjoyed everything, please subscribe for more, because I will be uploading a ton more videos on day trading related items. And I really hope to share it with you guys soon. So thank you guys, and I'll see you guys in the next video.